And we need to put some people in some context here as to where the markets really are and why this is so turbulent. Dan, put it in context for us.
Okay, it's not the Great Depression. There's a big difference between what's happening now and what happened then. During the Great Depression, the government tightened up credit. They took money out of the system during that period of time, and that's why it became the Great Depression. And then you had the Dust Bowl, so the crops also were a factor. Right now, we're in a situation here where we have a liquidity issue. It's not a business issue, it's a liquidity issue, that people are now selling all types of assets, all asset classes, to raise cash. Cash is king because the banks have tightened up the credit, not the federal government. And so much money's been lost that the federal government hasn't even replaced as much as has been lost. So we're not in an inflationary environment, we're in a hyper-deflationary environment. This cycle will eventually turn itself out. We've had them before, it's nothing new. And just one last note, a depression is 2 years of negative growth. All right, that's a depression. We're not in a depression unless you feel it internally.
Yeah, exactly. I think, Craig, that's... Welcome back to the New York Stock Exchange here and Money for Breakfast. Joining me to the left is Lindsay Piegza, and to my right is Dan Shaffer. Guys, we continue to look at the future. Dan, next Friday is year-end for the biggest mutual funds in the business. A lot of people suggest what we are seeing this morning is a huge level of redemption activity that was started in Asia. How big a role will that play over the next week?
It will play a big role. I think we're going to have this volatility and this selling pressure up until the elections because there's just too much uncertainty out there. People really do not know what the future is going to bring with either candidate. And now with the markets melting down, it's become financially difficult. And now with the mutual fund redemptions, like you're saying, it's not just the mutual fund redemptions, it's the hedge funds too. They're quarterly redemptions, and some of them are on an annual basis. So we could see pressure and then a relief of the pressure, and then going into December, some more pressure. And that's going to be a problem.
What is going on. Dan Shaffer of Shaffer Asset Management to my right, and Lindsay Piegza from FTN Financial. They're quite the handsome pair, aren't they? All right, guys, we were just talking, Dan, let me start with you. We're just talking to Craig about what's going on in Asia, and we are seeing a flight to safety. U.S. Treasury levels not at the level we haven't seen since 1995. I mean, dollar-yen, the level we haven't seen since 1994. I mean, are we in unprecedented territory, or this could become unprecedented territory?
Well, remember we talked about on many of the earlier shows that we have to unwind 15 to 18 years of this over-speculation and this over-liquidity in the market. So the yen getting stronger is a reversal of the yen carry trade, where people were selling, taking the yen at a low cost of interest rate at 0.5%, and going and buying investments all over the world. So we're now in my opinion, a hyper-deflationary environment. Everything is unwinding, and it's all happening at the same time. That's why the yen is stronger and all the other currencies are weaker against the dollar. That's our opinion. Money is coming out of all different asset categories. Asset allocation today does not work. Everything is being liquidated, everybody's raising cash, and all those layers of leverage are coming down one at a time. That's what we see.
You learn a lot from today. What are some of the things that we should keep an eye on, you know, in a positive note about what it might suggest going forward?
The fact that the futures are limit down and we're going to get very heavy selling pressure today is key, that it could be near the bottom. And we're going to watch the volume, we're going to watch the options next week, and some of the reports that come out, the Commitment of Traders report that comes out at 3:30 about the futures market. This could be what everybody's been waiting for, to wash out all the weak hands, and now the smart hands start stepping in and taking advantage of these numbers. We are in major long-term support lines that if they hold, this could be the best buying opportunity for the next 15 to 20 years.
And Dan, what I worry about, or the message sends, is we're at the market's mercy. And I know a big sell-off does intimidate people and frighten them, but it is a short-term hit. You hope it is anyway. And you're responding to a short-term hit.
The market is sending a message to Congress. The market is talking to Congress. And they're telling Congress you need to do something and get it done.
But the market's always telling Congress something, right?
The market
didn't first like AIG, then it didn't like AIG, and it wanted more. Then the market, you know, first liked the Freddie and Fannie thing, and then it didn't, it wanted more. Right. So it seems like the market just kind of has them by the You know
well, the market is going to give them the message, and the message today was they weren't happy that this wasn't passed, because as the votes were coming up, the market was rallying up. Now, it doesn't mean the market would have held today. I can't get into the psychology of what's going on minute to minute, but the market is basically being down to the largest point drop day, saying to Congress, the Republicans and both Democrats, get it together now. Enough damage has been done. Enough has been said. People
yeah,
are
but
scared.
you know, Kathy, isn't this what we fight? Okay. So what do you think, Dan?
It sounds like she's just in one fund. Here again, a diversification issue was at play. I don't know who her financial advisor is, but you don't put all your eggs in one basket. There are some really aggressive funds out there, especially international funds, which have dropped dramatically.
Would you go for big fund families? A lot of people are finding that the small funds, it's so hard to get their calls in, and that what you might risk in return, if you're with a big fund family, Franklin's very big, of course, this is Fidelity and
Franklin
T-Wells,
Templeton, right?
that maybe that's the route to go.
There are some really great funds and great management teams out there, and you've got to look at what their philosophies are, their track records, and you still need to diversify. You go with one family, but you need a minimum of 4 or 5 funds. Because you've got to
no matter how much you have invested?
No matter how much you have, because per year, each one changes around.
What do you make of that, Larry, real quickly? What's your question, Mark? I don't mean to rush you, but...
Okay. My real question is, why can't we use Freddie and Fannie as vehicles to go out and buy these mortgages?
What do you think of that, Dan?
They can buy a mortgage.
I understand. I understand your question. What do you think of that, Dan?
They're a little tapped out here. I think that the federal government was trying to do that. They're trying to be the investor in this. The U.S. as a country is going to be the investor in these mortgages is what they're trying to do. And that with the Fannie Freddie thing is a separate issue here.
Yeah, they kind of burnt their own bridges, didn't they? All right, Karen.
That's the thing that's not getting through necessarily to everybody else. And, you know, Dagan and I both wanted to talk about the situation in California a little bit because Arnold Schwarzenegger, Dan, came out with this comment saying we might need $7 billion extra here to fund our operations.
Because the 6th largest economy in the world can't borrow money in the short run.
Yes. Now, going back to what's been discussed here, this delivery of what the problem is has not been made clear to the public, and the public is getting bits of information from all different people. The senators just look for sound bites. They just want to get on and get something said, so they'll say something totally negative or totally something not even related to what's really happening.
And over the top in some cases, which doesn't necessarily help your case if you're trying to make.
Time now for another round of quick shots, and I'm calling this one, you got a 6-shooter in your pocket, you better shoot quick in this market. Thanks for that hat.
You know what I'm calling this one? Broke back quick shots.
That's painful. Dan Shaffer in the house off the Brokeback comment. How's that treating you there, Dan? Eric Bowling also off the Brokeback comment.
Hey, no offense.
Dan.
No offense. He's a big guy. He's a big guy.
Dan, let's talk a little bit about what the difference between Obama's plans versus McCain's plans for this economy and for society in general. Do they impact your outlook for this market?
Not necessarily, but I'm a little concerned about maybe some of the higher taxes that Obama's plan might put into play, which could hurt the smaller businesses. McCain, I think, would be good for the stock market, so I'm a little bullish on the McCain for the stock market.
And I'm going to take that even bigger.
I'd like for you to.
You hand the ball off. Listen, I'm running around the end, and I'm going for the end zone with this because clearly, if McCain doesn't get in, Obama's here, you're going to see higher capital gains tax. You're going to see dividend taxes. These are not good. Stock markets don't like these types of taxes. These are going to be very, very negative. I think that's what you saw. Maybe, hey, let me throw this out here. 400-point rally today. McCain had his best debate last night. I don't know. Stranger theories of,
hold on, though. Let me throw it to you this way. I'll be the linebacker around here and tackle you both because I can't tell the difference between either one of these guys. They both were for the $2.25 trillion stimulus bailout package. They both are for higher taxes. They're both saying that they're not going to tax me anymore. But there's no way that they can be pumping all of this money into the system and paying all of these bills for everybody, homeowners now too, and I'm not going to get taxed higher.
Right, absolutely. There's going to be a tax in there. McCain talks about cutting costs in Washington, which, you know, hopefully he's capable of doing. But I think that the Obama campaign is going to raise the taxes to pay and distribution of wealth.
McCain said he's going to freeze taxes, and then Obama has clearly said capital gains are at risk, dividend taxes are at risk.
Guys,
he's going to distribution of wealth.
I've been in New York working Wall Street for 12 years, and over the last 3 presidential elections, every time the Wall Streeters were sort of divided evenly between Republicans and Democrats. I don't know a single Republican that thinks Obama is a good idea.
I agree with that. I don't think he's good for Wall Street.
How about a contrarian aspect on that? Maybe Obama's good for Wall Street.
You don't have to ask him.
You know, I just think
guys,
that...
I guess here's what it confuses me. I can't tell the difference. And so I guess I need you to explain to me how you can actually be more bearish about Obama's plans than McCain's plans, because I'm bearish about them both. I'm seeing them both implement the policies that we're living through right now.
Well, you have two sides here. You've got the Democrats, which normally like to tax from the rich and give to the poor.
Well, that's the conventional wisdom.
Yeah,
that's what I get. That
yes,
I get the conventional wisdom.
That's
I don't
what Eric's
believe
talking
it.
about with the capital gains.
Cody,
He's going to
just
take
said
the capital
95% of the people in the United States are going to see at least no increase in tax. You got 5%. The wealthiest 5% are going to get tax increases. There it is. Right. Tax the rich, give to the poor.
Right. And
McCain doesn't do the same?
I think McCain is going. His platform is going to lower the costs in Washington and freeze everything and try to keep taxes down to a minimum, because he's got that theory to keep money in the pockets of the small business.
Let me ask you this: why didn't McCain step up and basically fight the multi-trillion-dollar bailout package for Wall Street? The constituents around the country would have glommed onto that. They would have loved it. Then I actually might have thought that, yeah, one guy might be good for the market, one guy might be bad. I say they're both bad.
As far as standing up to that package, you're talking about people who don't have a handle on what's really going on. So to stand up or not stand up, you got to try to.
Who doesn't have the handle on
it? Well, you had Bernanke and you had Paulson, and then now you had McCain running to Washington during this crisis of this.
All right, now I want to get a handle on it.
Can I just, before you get there, can I just tell you, or maybe they did have an idea and they realized how dire the situation was, and they realized they couldn't vote against that, because if they didn't get it, God forbid they didn't get it, and the market fell apart.
Eric is still convinced that the government can fix the economy by tweaking and redistributing wealth.
Well,
I think you can save a lot of hardship by doing that.
All right, so give me a couple of stock picks. One of your stock picks is actually governmental related. I like the unmanned airplane.
Well, one of them is governmental related, but I'm looking at smaller companies. These are the companies that the hedge funds and the large speculators, they didn't have to bail out of because of margin calls and liquidity issues. So I'm looking at the Russell 2000 group, and I said this the other morning on the show. You got Aero Environment. This company manufactures small aircraft, intelligence, surveillance, reconnaissance, and you're talking about a company that's only like 641 million market cap.
Eric, how about as you look out over is military a place you want to be betting? The military.
Let me just point out something he said that's very accurate. The big hedge funds had to bail. The first thing they bailed was the big stocks, big caps.
The most liquid ones.
Right. And the other ones haven't really been sold.
Right.
You can look at two ways. They may be.
They might be the ticking time bombs. Actually, let's hear that. Are the smaller hedge funds like I used to be going after these guys?
I like to buy stocks at or near their 52-week highs, and if they meet my 10-point criteria. Momentum. You like momentum too. These are stocks, the Spartan Stores, Imogen Biosolutions.
Talk a little bit about the Spartan Stores. That's
here's a small company, 500 million market cap. They're in the grocery business. They have supermarkets. They're distribution.
As I understand it, they're actually distribution for the supermarket.
Yeah, distribution
in like two random.
They're the middleman.
Midwest states.
They're the middleman.
So, are they not going to be hit by the?
They're in the sweet spot. Here's why: because they passed on the higher cost of fuel and corn and wheat and everything like that. And as those prices go down, those high prices they've passed on, they still get that.
Spartan Stores, throw that stock symbol name.
SPTN.
I like that one. That's what I'm going to do a little
You like one of my stocks?
How about that?
Ring the bell. Ring the bell.
Must be an upside-down market when I'm liking one of Dan Shaffer's stocks. Another round. This was another version of Brokeback Quick Shots. We got a whole lot more Brokeback Happy